Howdy. Welcome back to Dion Talk. I've only been investing for a little over 10 years. So I don't think I've seen true cycles, like a real estate crash of 2008 or even the cycles that happened before that. But I'm always curious when I hear real estate agents say things like, the best time to list your house is on a Thursday because of XYZ reasons, or the best time to own a rental is in the summer because people are willing to move. So I'm actually curious. I've got Michael Zuber, author of One Rental at a Time, and his second book, 15 Conversations with Real Estate Millionaires, who's been investing at least twice as long as I have and has invested in stocks and real estate. I'm curious, as we're coming up to the end of 2021, what do you think the next couple of months are going to be like as the year closes out?
So when you talk about that, we'll talk about real estate, but there's probably other topics we can go to. So in the real estate world, the year is pretty much made. What do I mean by that? Well, real estate transactions today take about 45 days, best case. So any contracts that are going to be signed today, most of them won't close till next year. So like I talk to real estate agents and brokers and some of my experts on my channel are those. And I'm like, dude, your year's made, right? If you don't ink a contract by the 15th of November, you have very little chance of closing this year. But, generally speaking, because numbers came out just today, and I'll go from memory, right? Daily financial news, we talked about it. Appreciation is slowing down, right? A couple months ago, it was 26%. Now it's 19%. I think that continues, right? I think appreciation continues, and that goes back to the real estate slowdown. I do think we'll have more inventory. I think the last I saw, we had 1.32 million. I think we have a little bit more heading into the end of the year. I think generally speaking, winter slows down for much of the country. Last year was an exception. Last year's winter was actually quite busy because of the pandemic and the gaps in demand, right? We were kind of slow in the summer and busy. I think that works out. So I think real estate appreciation continues to slow down. I do not think it goes negative. For example, Austin, Texas, 32.5% year on year last month. That is nuts. It won't be 32.5% next year, right? It just can't, or shouldn't, I should say. So I think real estate continues to go down. I think inventory goes up. Days on market goes up. Price drops will happen because we're starting to see people who think it's April act different. So they set the bar too high and now they're making more realistic. In general, I feel really, really good about my call that the housing market is slowing down. It's going from 100 miles an hour to 45 or 50. And I think that trend continues next year. We'll go from 45 to 15. We're not going negative. There may be a few MSAs, areas of the country that might go slightly negative, but we're not going negative on a national level.
So running a truck driving school, it's different every year. You have a really good cash flowing year towards the end of the year. You want to make sure that you're going to have the write-ups that you need. So sometimes you get a call that says, buy 3 trucks.
Yeah, exactly.
By the end of the year.
It's December 8th. Go buy 3 trucks.
Go buy 3 trucks, right. Something very similar to that.
Yeah.
So in real estate, we're coming up, like you said, if you don't have it under contract by November 15th, if it doesn't close in 45 days, you're really close to the end of the year. I think in the next month, we would see, from my short experience in real estate, the normal winter slowdown.
Yes. Yeah.
But
just one little quick caveat, because you will have some people that say it will be, let's sell 3 trucks. The kind of reverse of that. There will be some owners that for tax reasons or whatever, there'll be some of those, but it won't be meaningful to kind of sway the numbers. But that does happen, right? Absolutely.
Right. So as an investor over these next few weeks, I think the strategy to use is speed.
Oh, no question.
There's the people who might go sell 3 properties, sell a property. The person who comes in and goes all cash, no appraisal. So we don't have the appraisal delay that takes. And a 5-day inspection period instead of a 10-day inspection period is going to be the most attractive offer over a higher offer with leverage, because you need an appraisal and it can take longer, so that seller might be able to close by the end of the year.
Yeah. My deal of the decade, I try to do a deal of the decade. For me is the best deal of the year. 60 to 70% of the 20 years I've been doing it, my deal of the decade became between Thanksgiving and New Year's Eve. it's because at some point, price is secondary, speed is first.
Right.
And I look for it every year. I didn't get one last year because it was such a wacky market, but I look forward to doing one this year for sure.
Cool. And I'm looking for one as well. I'm back into the hunting phase.
There you go.
Awesome. Cool. I wanted the opinion of somebody who's been doing this for a while. And so you kind of track it the way that I do. It's going to slow down for winter, but those specialized deals where speed is what is important, this is the time to act.
Yes, that will happen for sure. Yes. Yeah. And then the other things that you can think about when you think about the real estate market is interest rates. I think interest rates are up higher, not meaningfully higher by the end of the year. Tapering announced, CPI at 6.2, PPI at whatever it was, 8 point something. There's a lot of inflation in the system, and we could debate whether deflation is something that comes around next year or not. I think that's an interesting discussion. But between now and the end of the year, it's all inflation. It's all in the cake. It's frankly speeding up, not slowing down, which is very scary. It's one of the things that I think is most dangerous today for investors is you and I have been talking about in the Lumberjack, I've been talking about these crazy rent growth, your binder strategy. Now I am starting to see, Dion, behavior that frightens me, right? Let's just assume you had 15% on your increase on your last binder strategy. I'm seeing people bake in 15% for the next several years. Folks, that's not going to happen. It is not going to happen. If you were buying a deal, and heaven forbid you're buying a syndication with unrealistic rent expectations, you're going to be greatly disappointed. Inflation is a tax that crushes people. And at some point, they're not going to be able to pay the rent because they got to pay the light bill and the car bill and the cell bill and the food bill. There's a cap. And I have seen some bogus assumptions on rent growth. I'm like, where are you grabbing this from? Yeah, well, you got 5% last year. It doesn't mean you're going to get 5% next year. I mean, the incomes are not going up. And incomes went up 5.1%, which is amazing until you realize inflation is 6.2 and most people are going backwards. It's terrible.
What's interesting is rents are set by wages, and wage inflation is happening this year, not because companies can charge more, so they're paying more. Wage inflation is happening because for the last year, people were able to get unemployment, extended unemployment, extra unemployment, and stimulus. I personally know people who are just now starting to look for work because their unemployment ended. So for the last several months, to draw somebody in off of unemployment, employers had to offer more money. They had to offer huge sign-on. We have trucking companies that are offering $15,000 sign-on bonuses just to recent graduates to come and work at their company. Next year, we won't have extra unemployment, extended unemployment, all of these things that are giving people the option to just not work. So the wage increase that we saw this year impacts the rents for this year. So yes, I'm seeing 20 to 40% increases on my rents across the board. But rent is kind of like appreciation. It's not tied to it, but it's kind of like it. It's very easy to look at an internal rate of return for the last 3 years. It's easier to project cash flow for the next few years, but it's really hard to project an internal rate of return in the future. You don't know what the appreciation is. You don't know what the rents are going to be. So if people are buying deals thinking in 3 years with these 15% per year increases, I will have a great deal. Yeah. That person is going to have a great place for sale in 3 years that we should pick up.
And that's happening today. That's why I'm building. That's why when you and I talk, why I am taking free and clear assets and getting debt. Because yes, I know deals aren't here today, but I want the cash in 2 years when that great deal comes up, because I think borrowing costs are substantially higher in the future. So I want to have the dry powder today. That's what I'm doing.
I do see buying opportunities coming up in the future from people who made poor buying decisions now. And I'm going to say this in a couple of videos every now and then, since you think the rates are going to be higher next year. I think they're going to be lower. We have bet $1.
We have.
By June, I think the rates will be under 3.33 or 3.5 or whatever we picked.
Whatever, 3.3.
3.3. There you go. Yeah, I think deflation is going to be what causes that.
That's a very interesting discussion.
And when I do some research, we will have a video on that topic.
But not today.
Yeah, that'll be an interesting one because when you do your research, realize that deflation is perhaps the scariest thing possible for the Fed.
Which is why the rates will come down some.
Oh, no, yeah, absolutely. They know. Yeah. Mm-hmm.
So if it happens, then rates will come down.
Oh, yeah.
And I have a list of reasons why I think deflation is going to happen. And I look forward to making that video with you.
It is certainly possible. It is not where my mind is at today, but I would love to have that discussion.
Awesome. Cool. Well, Mike, if somebody has questions and wants to reach out and actually ask an educated investor, because you have a master's degree, and I'm over here sitting with this PhD, so I can't answer any of those kind of questions, public high school diploma. How can they get a hold of you?
Go to your Google search bar and type in one rental at a time. You should see lots of stuff.
Awesome. Thank you. Until my next video, thanks for coming to my Dion Talk.
We're sorry, the number you have dialed is not in service at this time.